Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now this is the last video on the main problems on other receivables and other payables. So far I have uploaded first two theory video on the concept of other receivables, other payables. So what is the meaning? I have already explained. Then 4 videos I have uploaded on short questions and MCQs. Hope my regular viewers have already watched those videos. Got the good command on the concept of other receivables, other payables. Now I'm going to start the next problem, that is problem number 8. But before starting the problem, I expect my viewers to have a printout of the problems which are given in the link under my description. Without having these problems, you cannot be able to understand the solutions. So always keep ready the problems. Now take a screenshot of the solutions from problem number 8. After that, I'll give the complete explanation about all the points. Come on, see the 8th problem. Rent of $1,000 per year is payable at the end of every 3 months, but it is not always paid on time. The business has entered into an agreement that every 3 months rent will be paid. The whole year's rent is $1,000, but $1,000 will not be paid in one lump sum. It is paid in installment every 3 months. Details of the payments are shown below. So 250, 4 times 250's amounts are to be paid. The rent due, the first amount will be due after 3 months. That means on 31st March 2016. So our year begins from 1st January 2016 and ends on 31st December 2016. So during this year, the first installment of rent $250 is due on 31st March 2016. But it is not paid on 31st, it is paid. It is paid on 31st March 2016 only. On time it is paid the first installment. The second rent of $250 is due on 30th June. But it is not paid on 30th June. It is paid on 2nd July. There is a little bit delay. Third installment of $250. It is due on 30th September. But it is paid on 4th October. There is delay in paying the third installment. Then fourth installment of $250. This should be paid on 31st December, but it is not paid on 31st December. It is paid on 5th January 2017, means next year. That means the last installment of $250 is not paid in this year. It is paid in the next year. So in this year, it is due. The rent is due, outstanding, owing. It's a liability. The last $250 is a liability. Prepare the rent account. Ultimately, it is asking you to make the rent account. Now see carefully. Rent account. The debit side, date, details, dollar. Similarly, date, details, dollar. 3 columns debit side, 3 columns credit side. Now, first of all, the rent is paid. The first rent is paid on 31st March 2016, $250. When rent is paid, cash is going out. So bank account is credited. The entry will be rent account debit, bank account credit. The rent account should be debited. So this is the rent account. Debit side 2016, March 31st. Cash book. That means when amount is paid through bank account is there in the cash book. So we can write down here bank or we can write down cash book. Anything will do. So I'm writing here cash book. How many dollars have been paid? $250. The second installment paid $250. $250 second installment, it is paid on 2nd July 2016. So July 2. Again cash book $250. The third installment of $250 is due on 30th September, but it is paid on 4th October. So 4th October, cash book $250. Now 31st December, $250 is due, but it is not paid. It is not paid, so it's a liability. It is rent owing. So we will take down here 2017 January 1st balance brought down 250. It's a liability. Rent owing is a liability. So it will show credit balance. So credit side brought down. When it is taken credit side brought down, so debit side carried down. Balance carried down $250 on 31st December. If it is paid on the same date, we would have written cash book. If the rent is paid on the same date, 31st December, we would have written cash book. But it is not paid on 31st December. It is paid in the next year. We are closing the accounts on 31st December. That's why we'll take balance carried down 250. Balance brought down 250. Now take the total of the debit side. 250 into 4, 1000. The total rent is 1000. For 1 year, total rent is 1000. This will be transferred to income statement. So credit side, income statement, 1000. That's all. This is the end of problem number 8. Similarly, 9th problem. Insurance for a business cost $840. So 1 year insurance. Just like the previous problem. Previous problem we were having rent. In this problem we have insurance. Both are expenses. So 1 year insurance is $840. Starting from 1st January 2016, the business agreed to pay this at a rate of $210 every 3 months, just like the previous problem. Every 3 months, $210. The first installment $210, second installment $210, third $210, fourth $210. In this way, 4 times $210 will be paid. The total is $840. However, payments are not made at the correct times. The details are shown below, exactly similar to the previous one. First $210 is due on 31st March and it is paid on 28th February 2016. That means before the due date it is paid. That is 28th February it is paid. Then next $210, 30th June it is due date. But $420 is paid. Not $210, but $420 is paid on 31st August. Third installment of $210 is due on 30th September, but no, not paid at all. The third installment is not paid. Fourth installment of $210 is due on 31st December, but it is paid on 18th November. Before December itself, November 18th, $420 is paid. That means the business has paid more amount of insurance. That is prepaid insurance. Insurance paid in advance. Prepare the insurance account. So this is the insurance account. Credit side, we take income statement. How much is the total insurance for 1 year? It is $840. For 1 year insurance is $840. This $840 should be transferred to income statement. So credit side, income statement, $840. Now payments. The first payment of $210 was made on 28th Feb 2016. So 2016 Feb 28th, cash book, bank. How much is paid? $210. The second installment is paid $420. When it is paid? 31st August. So 31st August, cash book, $420. It is paid. Third installment is not paid, but last installment is paid on 18th November. 18th November, amount paid is $420. So November 18th, cash book, $420. So 3 times amounts are paid. First time amount paid $210. Second time amount paid $420. Third time amount paid $420. The total amount paid is $1,050. During the whole year, $1,050 are paid. But how much is the actual insurance expenditure? $840. Instead of $840, the business has paid $1,050. So how much is the balance? A $1,050 minus $840, $210. $210 is the insurance paid in advance. Insurance paid in advance is a prepaid. It's an asset. An asset will show debit balance. So here carried down 210, here brought down 210. So 1st January 2017, the balance brought down is $210. This is the rent account, this is the insurance account. Now 10th problem. A business buys stationery to the value of $2,200 in 2016. The stationery bought $2,200. At the end of the year, they still have $400 of this stationery on hand. That means whatever stationery is purchased, the whole stationery is not consumed. Out of $2,200, $400 worth of stationery is unused. Stock of stationery at the end of the year. So how much is used? 2,200 minus 400, $1,800. $1,800 worth of stationery was used, and that only will be charged to income statement. So in income statement expenses, we will take stationery 1,800, and this 400 worth of stationery which is unused, that will be taken in the statement of financial position, right? Now explain the treatment of stationery in the income statement and statement of financial position. Prepare the stationery account. First of all, it is asking you to give the explanation about this stationery. What is that? $2,200 purchased, out of which $400 unused. Only $1,800 used. That $1,800 will be debited, will be taken under expenses in income statement. And $400 of the stock which is not used, that will be carried over to the next year. It will be taken under assets, right? Now, the stationery used up is 2,200 minus $400, $1,800. This is the stationery used. The remaining stationery needs to be carried forward to 2017 as an asset, balance, debit balance. The stationery is shown as the other prepaid expense in the statement of financial position. This is the explanation of that point, stationery. Now it is asking you to make the stationery account. This is the stationery account. We have paid, we have purchased stationery and made the payment. Entry will be stationery account debit, bank account credit. Because money is going out, bank account is created. So stationery account debit side bank. How much amount is paid? 2,200 is paid. But out of 2,200, how much should be charged to income statement? 1,800. So here income statement 1,800. How much is the balance in stationery account? 400. So here balance carried down 400, then balance brought down 400. That means still we are having 400 rupees worth of stationery on hand. So stationery account is showing a debit balance. It's an asset. That's it. This is the end of 10th problem. Now problem number 11. See carefully. A company's warehouse is larger than their need. So they rent part of the warehouse to another business for $800 per annum. That means the business has let out some part of the premises on rent. So the agreement is every year $800 will be received in the form of rent. The following are the details of the year for the year ended 31st December 2016. $200 due on 31st March 2016 but received on 4th April 2016. Small delay will be there. Actually the rent should be received on 31st March but it is received on 4th April. Then $200 due on 30th June but received on 6th July. Then $200 due on 30th September but received on 9th October. And last $200 is due on 31st December but it is received on 7th January 2017. That means as on 31st December it is not received. The last final amount of $200 is not received. Rent receivable. Rent receivable. It's an other receivable. It's an asset. An asset will show debit balance. So what it is asking you? Explain the treatment and prepare the rent received account. Treatment. Treatment will say that rent received for 1 year. The complete 1 year rent is $800. The complete 800 will be taken as income under income statement. But out of 800, 200 rent, the last installment is not received. The rent receivable that is an asset. That is an asset. The balance brought down 200. So what is the explanation? Any rent paid by the SSC is charged as debit to income statement. Rent is of two types: rent paid, rent received. If the rent is an expense, it will be taken under expenses of income statement. Suppose rent is received, it is an income, it will be added to gross profit in the income statement. It's an income. So here, rent received is transferred to the credit of income statement since it is revenue or income. The amount that the company needs to transfer to income statement for 2016 is that owed to them for the 12 months. The complete 12 months rent, whether received or not, immaterial. The complete 12 months rent should be taken as income in the income statement. Irrelevant whether we received it or not. Complete 12 months rent should be taken. And the company completes the rent received account by carrying down the balance owing as a debit balance of 20 to 2017. The rupees $200 owing is an asset on 31st December 2016. The last installment of $200 not received, it is receivable. So that 200 will be carried over to the next year 2017. So how the rent received account will look like this. First of all, when rent is received, bank account debit, rent received account credit, because money is coming. The bank should be debited. The rent received should be credited. To credit side, 2016 April 4. First installment of $200 is received on April 4. So April 4 bank 200. The second installment is due on 30th June, but it is received on 4th July. So 4th July bank 200. The third installment of $200 is due on 30th June, but it is received 30th September. It is due on 30th September, but it is received on 9th October. So here 9th October bank. The last installment of $200 is due on 31st December, but it is not received. On 31st December, it is not received. So it is outstanding. It is receivable. So it is an asset. An asset will show debit balance. So debit side, balance brought down $200, 2017 January 1st. When we have taken brought down balance on debit side, carried down balance will take it on the credit side. So credit side balance carried down 200, December 31st. Now, the 1 year complete rent should be transferred to income statement. So debit side we take income statement $800, 31st December 2016. That's it. This is the end of problem number 11. Next, 12th problem. Kalim has a retail business and pays insurance on his premises. He pays an annual premium to the insurance company for the year ended 31st December, but prepares his accounts to 30th September. So Kalim is closing all the accounts on 30th September. But when insurance premium is paid, it will be paid up to 31st December according to the rules of insurance company. Up to 31st December. At 1st October 2005, he had prepaid insurance of 300. Prepaid insurance is an asset. An asset will show debit balance. And he paid the next year's annual premium of 1,320 on 1st January 2006. 1st January 2006, he has paid 1,320 as the annual premium for 12 months. Required. Show the entries in the Kalim's insurance account for the year ended 30th September 2006, including the transfer to the income statement for the year and the balance carried down to 30th September 2006. Simply, we have to make the insurance account. First of all, there is a prepaid insurance of $300 on 1st October 2005. So here, 1st October 2005 balance brought down because it is prepaid, it's an asset. An asset will show debit balance. The balance brought down $300. During the year, he has paid $1,320 annual premium. So when money is going out, bank account is created. Entry will be insurance account debit, bank account credit. So insurance account debit. So debit side bank 1,320. This is the amount paid. Now how much amount is prepaid? This 1,320 is paid for 12 months, 1 year. And this 1 year is going to expire on 31st December. Because the insurance premium is paid from 1st January to 31st December. So how many months are going in the next year? 3 months. Because we are closing the accounts on 30th September. Closing the accounts on 30th September. October, November, December. These 3 months insurance is prepaid, advance paid. So how much is 3 months premium? Here I have shown prepaid insurance 1,320 into 3 by 12. 3 by 12, it comes to $330. So $330 are prepaid insurance. It's an asset. So debit side, balance brought down $330, 2007, October 1st. Now brought down is on debit side. So carried down will be on the credit side. So balance carried down $330. Now find the balance. Take the total on the debit side 1620. 1620 minus 330. 1620 minus 330. The balance is 1,290. So 1,290 insurance will be transferred to income statement. Will be transferred to income statement. That's it. So this is the end of problem number 12. Now, the last and final problem on this other receivable and other payable, that is problem number 13. See carefully the 13th problem. Nikita has a business with a financial year end on 31st January. So before even starting the problem, take a screenshot of the solution of 13th problem, then I'll explain all the points. Come on, see the 13th one. Nikita has a business with a financial year ends on 31st Jan. So every year on 31st January, the person, the sole trader Nikita is closing the accounts. On 1st February 2017, there was a credit balance of $140 on the electricity expense account. So she is having one expense, electricity expense account. Beginning of the year, it is having a credit balance of $140. So you can see here, Nikita, electricity expense account, A point. Debit side, date details dollar, date details dollar, credit side. Now it is given at the beginning of the year, that is 1st February 2017, beginning of the year. There was $140 credit balance. So credit side, balance brought down $140, February 1, 2016. This is the opening balance. Now, during the year ended 31st Jan 2018, the following payments were made relating to electricity. When payment is made, the entry will be electricity account debit, bank account credit. So electricity should be debited to debit side, bank. So on which date amount is paid? 10th March, $210. So 10th March 2017, $210. First payment made. The second payment made June 7th, $130. June 7th, bank, $130. Next, September 5, $185. September 5, $185. Then December 6, $205. So December 6, $205. So all the payments I have taken on the debit side. Because when payment is made, electricity debit, bank credit. So debit side. Now, the cost of electricity for 3 months ended 28th Feb 2018 was estimated to be $330. 3 months electricity cost is $330. So per month it will be 110. 330 divided by 3, you will get 110. So per month $110 is the cost of electricity. That means for 3 months it is due. Now 3 months is ending on 28th Feb 2018. But our year ends on 31st Jan. 31st January our year ends. That means 2 months are falling in the current year. So current year 2 months electricity is due, owing. So for 1 month it is $110. So 2 months $220. Actually 3 months is ending on 28th Feb, but we are not taking up to 28th Feb. We are closing the accounts only up to 31st Jan. So out of 3 months, 2 months are falling in the current year. So 2 months electricity is 220, 110 into 2. So this 220 electricity charges are due, owing. Owing means it's a liability, and liability will show credit balance. Liability will show credit balance. So credit side, balance brought down 220. This is on 2018 February 1st. Next year will begin. Next year will begin from 1st February. We are closing the accounts on 31st January. Right? So brought down is on credit side. So carried down will be on the debit side. Balance carried down $220. Last date 2018 January 31st. That's all. Now take the total. Total of the credit side. Total of the debit side is $950. So 950 minus opening, how much was due? 140. Opening amount due was 140. So 950 minus 140 is $810. This is the electricity consumed or used during the year. Electricity used during the year is $810, and this should be transferred to income statement. So this is the balancing figure. It is not given in the problem. We have calculated balancing figure. So $810 will be transferred to income statement. That's all. This is the A point completed, electricity expense account. Now B question, state what the balance brought down on 1st February 2018 on the electricity expense account represent. The balance brought down on 1st February 2018, the balance is $220. What does this mean? It is asking you. So this credit balance of expense account denote that amount is owing, not yet paid. Not yet paid. Current year's $220 electricity amount not yet paid, still to be paid, owing. That is the meaning. So here the amount owed or not yet paid for electricity used in the financial year ended 31st Jan 2018. So this much amount is still payable. That's why it is showing a credit. C point. Name the section of the statement of financial position on 31st Jan 2018 in which the balance on the electricity expense account was included. Now this $220, that is the balance, in which section of the statement of financial position this amount will be shown. Now you decide. When it is showing a credit balance, it's a liability. It is a liability. So this amount will be shown on the liability side under current liability. Under current liability, electricity owing, electricity bill owing. So how much is the electricity bill owing? 220. And this will be written under current liabilities. That's it. The first part completed. Now second part. Nikita also rents out some premises. That means Nikita is letting out her own premises on rent. The rent is an income. Rent received is an income for Nikita because she has let out some premises. On 1st Feb 2017, the tenant owed $1,250. Nikita has to receive $1,250 from one of the tenant. It is the amount to be received. Receivable. So it's an asset. For Nikita, this $1,250 is an asset. It is the amount to be received. And all assets will show debit balance. So debit side. Balance brought down $1,250. This is the rent receivable account. This is on February 1st, 2017, beginning of the year. Now, the following amounts for rent were received during the year. When rent is received, the entry will be bank account debit, rent receivable account credit. The bank account will be debited and rent receivable account will be credited. So here credit side. 2017 May 10 cash 2700. It is given cash. May 10 cash 2700. So I have taken cash 2700. Next one is October 14th check 2800. So here October 14th bank 2800. Then on 31st Jan 2018 means end of the year, the tenant owed $1,700. The tenant owed means tenant have to pay to us, pay to Nikita. So still due from the tenant is $1,000 to $1,700 at the end of the year. When the amount is receivable, it is an asset. For Nikita, it is an asset. So all assets will show debit balance. So here debit side, balance brought down 1700. This is the beginning of the next year. Next year begins from February 1st, 2018. So when brought down balance is on debit side, carried down balance will be on the credit side. So credit side balance carried down 1700. Last date 2018 January 31st. Over. Now take the total on the credit side. Credit side, if you take the total 7,200. From 7,200 deduct 1,250. The balance is 5,950. This 5,950 should be transferred to income statement. Denoting this is the income, rental income for the year. The rental income for the year is 5,950. It should be transferred to income statement. That's it. This is the rent receivable account. The last question's E point. Name the section of the statement of financial position on 31st Jan 2018 in which the balance on the rent receivable account was included. This balance of rent receivable account, in which section of statement of financial position this amount will be shown. Now we have to decide whether it is an asset or liability. $1,700 is the amount receivable from the tenant. When the amount is receivable, it's an asset. It is an asset. So this $1,700, it will be written, it will be shown under the current assets of the statement of financial position. So when you make the statement of financial position under current asset, write down $1,700. That's it. So under current assets. This is the end of problem number 13. So totally 37 short questions and MCQs I have explained, and 13 long problems, main problems on this other receivable and other payable I have explained. I have applied my maximum effort in making you understand this topic of other receivable and payable. Comparatively, this topic is a little bit difficult compared to other topics. So in the first glance itself, you may not be able to understand. So if you want the command, if you want to get the knowledge, if you want to get a grip on this topic, you have to watch the video not once, twice, thrice. You must have patience. You must have an urge to learn the subject. Then only you can be able to understand. If you are not, if you don't have any patience, if you want to understand fast, it will be difficult to understand this chapter. So have some patience, watch the video twice, thrice, definitely you can get the comment. Inshallah, in the next video, I'll take up the next topic of the subject, accounting.